Hello everyone. This is the pre-market report video for 15th February 2023 in terms of Nifty and Bank Nifty. Don't panic, the title all hell breaks. It's just I made it up. There is no sort of such things. Since I was little bit bored while writing the script, so thought of doing a little prank. Anyway, back to the topic. To be honest, last night in US market, every known economic metrics that was released was not in favor of US market. For example, before the US market opening, US Bureau of Labor Statistics released the consumer inflation data for January month. On month-on-month basis, it increased by 0.5%, which was really a huge number, whereas in December month, it was just 0.1%. And thus, on year-on-year basis, it comes as 6.4% against expectation of 6.2%. In comparison, on December month, it was 6.5%. So, in the January month, the consumer inflation cooled only by 0.1%, which was not a good sign. Since it's kind of showing US inflation has already passed the peak value, but it is not slowing down as expected. Which means Fed has no other option. They have to raise another 25 basis points on coming March month and again 25 basis points in the May month. This also made the 10-year Treasury bond yield to increase near 3.8% from day before yesterday's 3.7%. However, finally it ended the day near 3.76%. Still, 3.76% is also a huge number, which made the inverted yield curve to over 82 basis points. Which was the exactly last thing that market wants now, since we all know as long as the yield curve inversion, there is always a chance of recession. And now this yield curve inversion is worse than 2008. Again, don't panic, it was like that for the last 3-4 months, but it just became little worse yesterday compared to the average number. Then additionally, after this inflation number, couple of FOMC members did the TV interview. In that, not the exact word but the context, both of them said that they have to increase the interest rate further and have to keep it for the longer period. Despite all this outright negativity, market closed mixed rather than outright negative. I mean, at the end of last night, Dow Jones dropped by 0.46%, S&P 500 closed flat and Nasdaq increased by 0.57%. In case of US VIX, it crashed over 7% to below 19. Regarding oil, yesterday, US government said that they are going to sell 26 million barrels of unused emergency oil. This kind of brought the one-week oil rally to the end, and at the time of this video, it dropped around 1.5%. I mean, WTI crude oil is trading near $78.5 per barrel and Brent crude oil is trading near $85 per barrel for the March month delivery. Coming to Indian ADRs, both the banks closed over 1% positive. Infosys increased by 0.5%, whereas Wipro closed flat. Regarding HX Nifty, at 3 am Indian Standard Time, it closed at 17,950 after reaching the day's high of 17,995. So, it's kind of indicating a flat to positive opening today. So, this is what happened in the global market. Now, let's move to the Indian market related info. Yesterday, during the market hours, Ministry of Commerce released the wholesale inflation data for the January month. The data comes as 4.73% in January against 4.95% in December. This is the 2-year low value. We already know the January month consumer inflation was bad, but this drop in wholesale is equally important since if it increases this month, then this will increase the next month consumer inflation data. Anyway, the data is good. Then another important thing to note it down is this FII buying. I mean, FII has been a net buyer in Indian market for the last 3 days continuously. Last time they did bought similar consecutive days was in the last November, which made the Nifty to move near 19,000 in December. Anyway, yesterday the net bought for 1,300 crore rupees and DAA net bought for 200 crore rupees. So the net institutional buying is around 1,500 crore rupees. This is kind of positive momentum integrating news. Regarding earnings, yesterday Adani Enterprise released its Q3 results. As per that, the revenue increased by 42% and it posted the profit of 820 crore rupees compared to previous quarter loss of near 12 crore rupees. This earning results finally kind of arrested the price fall only in Adani Enterprise. All other Adani stocks again continues to fall yesterday as well. In terms of stock specific, Hindustan Aeronautical CEO mentioned that they are in talk with 4 countries such as Malaysia, Argentina, Egypt and Botswana on the Tejas fighter jet export. So I consider this news as positive for HAL share. As a summary, despite bad US inflation number, the global momentum is not that bad at the moment. Indian areas were close to positive. SGX Nifty is indicating flat to positive opening. Again, last night, SGX Nifty reached the high of 17,995 and it turns low. So it looks like 18,000 will be the huge hurdle to pass. Just for info, there was a short build-up in Bosch, REC and Siemens. So recommending to be careful while trading in these stocks. It looks like some weakness in auto and auto auxiliary stocks. Let's see. Regarding the items to look out, today around 12:30 p.m. Indian Standard Time, the inflation of various European countries is in due, such as UK, Germany and Spain. Then in the aftermarket hours, in the night, US retail sales data, industrial production growth, NAHB housing index and crude oil inventories are some of the important metrics we need to keep an eye out for. Now coming to technical, yesterday Nifty opened a gap up of 70 points and it continues to move upwards throughout the day. So Nifty and Bank Nifty forms a long bullish candle, making it a higher high, higher low formation. But however, it's still trading within the budget day candle range. I mean, on the budget day, it reached the day's high of 17,976 and yesterday Nifty reached 17,955, then it started to correct itself. So now 17,950 to 18,050 will be a huge hurdle to pass. Breaking 18,050 will create a panic among the short sellers and will trigger the fresh short covering. So that is what exactly happened yesterday. Here, please note at present the India VIX is in the range of 13 to 14, which is very low and thus the low premium, which kind of created the low profit window for the option sellers. I mean, if the VIX is higher, then the premium will be higher. So the option sellers won't be panic even if Nifty crosses the call option strike price. But the present scenario is not like that. It's exactly opposite to that. On Monday, high number of call options were added at 17,800. Then yesterday when the market opens gap up, immediately all those call option sellers were forced to short cover. So if Nifty passed above 18,000 means, then I expect the similar short covering which can take the Nifty to 18,100 to 18,150 levels. Anyway, as long as Nifty trades above 17,800, then there is a high chance that it can break out the 18,000 mark. Coming to moving averages and technical indicator summary, for Nifty on daily chart, last Friday it was buy summary. In one single day on Monday closing, it turns to sell. Then again yesterday closing now turns the Nifty back to buy signal. I mean, at present Nifty is trading only below 50-day moving average and 100-day simple moving average. All others such as 5, 10, 20 and 200-day moving averages all are indicating the buy signal. Then coming to Bank Nifty, in case of moving average, the story is exactly the same as Nifty. So as a summary, it's also a buy signal. However, in case of technical indicator summary, MACD, ADX and Williams are indicating a sell or overbought condition. So as a summary, it's a sell signal. Then coming to options open interest analysis. First, based on change in open interest, there was a huge call option unwinding took place between 18,050 to 17,800 and huge new put options were added at below 17,900. So 17,900 is the immediate support. 17,800 can be a good support level. Then by seeing the overall options open interest, we can able to see there were a huge number of call option open interest still present at 18,000. So 18,000 is the immediate resistance. Breaking that, 18,150 can act as a strong resistance for this expiry. Coming to Bank Nifty, based on change in open interest, there was a huge call option unwinding took place at below 42,000, especially a huge quantity at below 41,600. However, it's difficult to predict a range here. So based on overall options open interest, 41,000 is the support to look out for and 42,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and it will also motivate me to do more. Please don't make any investment decision based on this as I am not a SEBI registered advisor. I am doing it for my and viewers' educational purpose only. Thanks for watching.